The current price for Tilray Brands Inc. on the Nasdaq, ticker symbol TLRY, is $1.68 USD, reflecting a gain of 0.080 USD or 4.99% in today's intraday trading session as of 1:06 p.m. GMT-4 on October 15, 2025. This stock movement, while seemingly driven by the recent positive surprise of Tilray's first quarter fiscal 2026 earnings, where they unexpectedly posted a small net profit, is actually concealing a deeper, more powerful shift. The entire cannabis sector's anticipation of U.S. regulatory change has just been profoundly re-anchored. That earnings beat, a $1.5 million net profit that defied analysts' consensus and marked a sharp turnaround from a substantial year-ago loss, wasn't just about Tilray's internal execution. It served as a much-needed, tangible proof point that profitability is possible for Canadian-listed companies, even while the primary and far larger U.S. market remains federally restricted. It's an operational validation that adds a foundation of substance to a narrative previously built almost entirely on speculation. The common belief surrounding TLRY is that it's the ultimate proxy trade for U.S. cannabis legalization, specifically the potential for cannabis to be reclassified from Schedule 1 to Schedule 3 under U.S. federal law. This expectation has fueled massive short-term volatility, pushing the stock up over 65% year-to-date at one point, with a significant part of that move coming from the momentum of the broader sector. However, the contrarian and more realistic perspective is this: betting on Tilray solely for the reclassification event misses the complexity of its actual business and the severe, persistent risk of share dilution that management has continued to employ. The recent positive earnings, a $209.5 million revenue print, driven by growth in Canadian adult use and international medical cannabis and a steady alcohol distribution segment, suggest a successful diversification strategy. Yet, the filing of a universal shelf registration immediately following those earnings, a tool allowing the company to raise capital by issuing new stock, is a stark reminder of the dilution risk that hangs over shareholders, potentially capping any sustained upside regardless of regulatory success. Today's intraday action is particularly telling. The stock saw a dramatic spike midday, hitting a high of $1.84, which is a significant psychological level. This surge, accompanied by heavier-than-average volume, suggests a mix of retail traders chasing the momentum from the positive earnings news from last week, coupled with tactical short covering. The initial morning trading saw the stock settle down toward the $1.60 range, but the sudden midday upward thrust suggests a delayed institutional reaction or a sudden influx of speculative capital following a news headline about the U.S. Department of Justice's DOJ, a Schedule 3 process that may have trickled out. In the volatile world of cannabis stocks, a swing of nearly 5% in a single afternoon, as we have seen, is often less about internal company performance and more about external regulatory noise. The current short interest on TLRY remains high, making it extremely sensitive to any news that could trigger a short squeeze, and the technical picture of the stock trading above its 50-day and 200-day moving averages does lend weight to a bullish technical sentiment, though the fundamentals lag far behind that optimistic technical read. The underlying trend across the entire cannabis complex is one of improving institutional sentiment, as confirmed by recent surveys showing a majority of institutional investors are now assigning a 60% probability to U.S. rescheduling happening within the next 12 months. This widespread optimism, which is a tailwind for TLRY, makes the current price volatility a direct function of that rescheduling or bust mentality. The stock is essentially trading on a political timeline, not a financial one. To truly understand Tilray Brands, you must look beyond the day-to-day stock price action. The company operates a highly diversified business across four main segments: cannabis, medical and recreational, beverage alcohol, wellness, and distribution via its CC Pharma platform in Germany. The strategic rationale for this structure is clear. Use the steady, non-cannabis revenue from distribution and alcohol, which includes popular craft beer assets, as a financial buffer and platform while waiting for the higher-margin cannabis markets to open up. In the recent fiscal Q1 2026 report, the distribution segment was the largest revenue contributor at $74 million, and beverage sales held steady at $60 million. This diversification is the firm's financial stability measure against the price compression and oversupply plaguing the Canadian adult use market. The cannabis segment itself only generated $64.5 million in revenue, which, while showing double-digit growth in international medical cannabis, Germany and Italy are key, is still facing stiff domestic competition from rivals like Canopy Growth and Aurora Cannabis. Historically, Tilray has struggled with consistent profitability, posting enormous GAAP losses, including a staggering $2.18 billion GAAP net loss in the fiscal year 2025. This history of financial losses is what gives the recent $1.5 million net profit such disproportionate weight in the market's mind, acting as a momentary counter-narrative to years of red ink. The company's goal with Project 420, a cost-saving and integration initiative, is to solidify this turnaround, but investors need to see more than one quarter of net profit to declare the strategy a true success. The future outlook for Tilray Brands over the next 10 days will almost entirely be a function of sector-specific news flow, as the core business simply does not move that fast. The most critical factor over the next 10 business days, which takes us toward the end of October 2025, is the ongoing commentary and potential leaks surrounding the U.S. federal regulatory process. No major announcements are scheduled, but the high-stakes political environment means any rumor or official comment from the Department of Justice, the Drug Enforcement Agency, or key political figures regarding the Schedule III reclassification could instantaneously send the stock soaring or plummeting. In the absence of definitive news, expect TLRY to remain highly correlated with the broader cannabis ETF movements and technical trading patterns. From a technical perspective, a sustained break above today's intraday high of $1.84 could signal a short-term trade targeting the $2 to $2.10 resistance level, a region last seen immediately after the earnings announcement. Conversely, a failure to hold the $1.60 support, which was the previous close and a psychological anchor for the start of the current rally, could see the stock rapidly drift back toward its recent lows around $1.50 as short-term traders take profits and skepticism returns. Given the high volatility, TLRY has a 60-month beta of 1.85. A short-term trader must be extremely disciplined with stop-loss orders. For the long-term holder, the next 10 days are noise. Their focus should remain on the company's ability to execute on its cost-cutting plan and grow its international medical cannabis and steady beverage alcohol segments to build a stronger financial base before the U.S. market opens up. The fundamental question remains whether Tilray Brands can consistently deliver bottom-line results that validate its premium valuation compared to its net losses. The current market price suggests a strong belief in the U.S. optionality and the management team's ability to pull off the turnaround, a belief that is certainly not yet fully supported by a long track record of profitable operations. The recent earnings offered a glimmer of hope, but the threat of new share issuances from the shelf registration, a mechanism for dilution, is the cold reality that investors must weigh against the regulatory optimism. Comment below how many shares of Tilray Brands you currently hold, or if you are solely trading the options market on this volatility. The next few weeks will test the conviction of every investor in this space. This constant tug-of-war between the speculative hope of U.S. legalization and the harsh financial reality of operating a diversified yet loss-making global cannabis business defines the Tilray story. The stock's massive intraday swings and high trading volumes are a direct consequence of this tension. Investors expect a stock price driven by political events. The deeper reality is that they are also trading a balance sheet that has historically required capital infusions. The recent earnings report was the first time in a long time that the expectation of progress met a reality of some profitability, even if minimal. That single data point is disproportionately influencing the current stock price strength. The ultimate question for the next quarter, and certainly for the next 10 days, isn't about Tilray's ultimate potential in a fully legal North American market, but whether its core businesses can generate enough free cash flow and revenue stability to prevent further significant dilution until that political day arrives.
The current price of $1.68 represents a substantial bet on political timing over financial performance, a classic characteristic of a highly speculative but compelling growth stock in a nascent, heavily regulated industry.